Good morning, good afternoon, good evening from wherever you're watching from. Welcome back everybody and welcome back to the channel. Hope you're all doing well. Today we're looking at how to predict a trending day or how to predict a trending market before it occurs. You know, in trading, markets occurs in different phases and different modes, and trending market or trending day is one of the most profitable days you can trade and make a lot of money out of the market. Because the market moves in different phases, but the trending market is very profitable since it's easy to trade trending market. So how do you predict trending days in the market? This is what we're going to look at today in today's video. So welcome everybody and pay attention to whatever we're going to do today and keep it in your mind and learn the tricks and the techniques I'm going to teach you and be able to trade and become profitable. So without wasting my time, let's go to the chart and let me explain some things on the chart. So when it comes to trading, market behaves in four several modes. And these are the modes I'm going to teach you. Pay attention. We know that market sometimes will trend. When you say trending mode, when market is making higher highs and higher lows. So you can see the market is making higher high here and higher high here. And this is higher low because it's lower than the other high. This higher low. When you see this pattern, as everybody knows, this is a trending market. So the market can keep trending until it reach a point where it want to reverse. It will keep making higher highs and higher lows until it want to reverse. This is a trending phase of the market. Secondly, the market also go through ranging phase, where the ranging phase, the market will make some perfect ranges. Perfect ranges. Now you can see the market hit a zone, come back, hit a zone. So there will be touches around the zones. This is what we call ranging market mode, which means the market is ranging. That is a perfect range. We have a perfect trend, which is trending market, and we have a perfect trend, which is ranging market. On the other hand, we also have a phase where the market is neither trending nor ranging. So in that mode, you see that the market will make a move as if it wants to trend, then it begins to range. Then as if it's trending, then it begins to range. This is the mode when the market is neither trending or neither ranging. In such scenario, your higher highs and higher lows are not clear. You can see this other high, this are higher low, and this is other higher low. But you can see that this one will come and take off the low as if the market is trying to reverse, but it won't reverse. It won't reverse down. It will do that. Then it push up again, going to break the higher high, and it keep messing up. In this mode, the market is neither ranging or trending. And the last mode is when the market is spiking, where you can see the market is maybe perfectly ranging. All of a sudden, you see a very big spike. Then a very big spike. The market is like misbehaving. This is a mode you normally see on your chart. So you can see these three phases plus the spiking mode making four on your chart when you're trading as a trader. So how many times will this thing occur? So let's see. You can see that in the trending market, you can get about 30% of the time the market will be trending. 30% of the time in the market, any chart you're going to open, the market will be trending. The market doesn't trend every single day. The market doesn't trend every single time. It trends about 30% of the time. You can also find out that about 30% of the time, the market is ranging, which means about 30% of the time, the market is making equal highs and equal lows. That is ranging market. Then about 30% of the time, the market will be messing up. And about 10% of the time, the market will be spiking. So when open any chart, either Euro USD, either pound yen, or any kind of chart you're going to open, you will notice these four different phases in the market. Your ability to spot which phase the market is in determines how good you're going to become as a trader and how profitable you're going to become as a trader. If you have no ability to determine how the market is and the mode the market is in, and you trade it anyhow, then it's like you are blindly trading. That's not how you trade. So with this, how are you able to predict these phases of the market? How do you predict a trending day before it occurs? Because if the market is trending and you are trading, then it's going to be easy for you to make some profit out of the market. Which means that if the market trends 30% of the time, which means this is ranging, this is not neither ranging or trending, which means about 70% of the time, the market is not going to trend. So you do not have to trade your trending strategies every day when you open your chart. Only the time when the market is trending. The same way, if the market is going to range only 30% of the time, which means about 70% of the time, the market is not ranging. So it's not every day you can open and you can be training your ranging strategies. Guys, do you get the scenario? Good. And the mode you shouldn't trade is this mode. Don't trade this mode and don't trade this mode. Why? Because they are not predictable. You cannot predict this mode. In such modes, you realize that the market is neither strong nor weak. So you can see that they are misbehaving as if they are trending, then they begin to range, then they begin to trend again, and you mess up. You get a lot of losing trades in that particular market mode. So do not apply your strategies in that particular market mode. And when the market is also spiking, please stay out of the market unless you are trading news and you know what you're doing. If not, stay out of the market completely. The mode you have to trade is trending market and the ranging market, and which means that you have at least 30 plus 30, which is 60. You have 60% mode where you can trade every day when you open your chart. It tells you that about 60% of the time you can trade your chart, but 30 for trending market, 30 for ranging market. This percentage I'm talking about is not fact. It's just an assumption that I'm teaching you here. Doesn't mean every time 30% of the time the market is ranging, no, or 30% of the time the market is trending, no. It's just an assumption. It's a practical assumption I'm just trying to make for you to understand how the market behaves. Okay, now let's come back to the second phase. How do you determine if the market is trending or if the market is ranging? If the market is about to trend, you first find this pattern. The first thing you have to find is you find this Z pattern, a pattern of A to a point B to a point C, where the high is taken out. So this candle took the high out. So the moment the high is taken out, then the market is in a mood to trend. You see 1, 2, 3. So what's happening is that sometimes the market continue to go up and then come back, hit any of the important zones and continue to trend, which means now we are in the trending market mode. That is how we determine if the market is trending. Okay, but sometimes it doesn't work like this every time, because you realize that sometimes comparing this market mode, looking at this particular market mode, this side, focus here, looking at this particular market mode, the market is neither trending or ranging. So sometimes you realize that the market is about to trend as if the high is broken. It come back, break the low again, as if it's going to range. Now it's messing you up. Because of this, that is why when you spot this thing out, you must also add one more confluence using the currency strength meter. The currency strength meter is the best tool I've ever had as a trader, because if you use the currency strength meter to sort out some currency pairs to find out which currency is trending and which currency is not trending, then when you find this zigzag pattern, most of the time it's going to work, because one currency pair is stronger than the other, and the likelihood of the currency pair to reverse back and change the trend is very low, which means the currency strength meter will help you to determine if the phase of the market is trending or not. So, guys, do you understand? If you want to spot a trending market, you use this zigzag pattern. Point A to point B to point C. Then you wait for the market to break the high, retrace back to a point D, and this is where you take your trace. And you set your stop loss and you take profit targets ahead. But as I said, because sometimes it's very risky to do that without having another confluence, that's when you have to use the currency meter to know which market is already in a trending mode before you'll be able to trade. If you're here for the first time or you don't know what we use the currency strength meter for, on the channel, we trade with what we call the currency strength meter. The currency strength meter is a tool which determines which market is strong and which market is weak, especially the currency pairs. So for instance, if euro is strong and maybe pound is weak, then we want to find a trending market, we merge the euro with the pound so that the market will be trending, because definitely one guy is strong or one guy is weak. That is how we use the currency strength meter to trade. If you are new in this channel and don't have idea about the currency strength meter, I have about 2 or 3 videos about the currency strength meter, fully dedicated to explaining the currency strength meter. And moreover, all my live training videos are also based on the currency strength meter. So if you are new here, then you can go back to watch those videos and get more understanding of how the currency strength meter works. But in this video, I'm explaining to you how you can properly catch a trending market before it occurs. That's what I'm explaining. So let's move on. So this is when you can find, okay, now I can enter here and I'll ride the market up. Very easy way to spot a trending market. If you're able to trade your strategies on trending market days, then you're going to become profitable. Okay, so with these explanations, it's clearly stated that you cannot trade every strategy on every market. You must only trade trending strategies on trending days, and you trade ranging strategies on ranging days, ranging day markets. You cannot just mess everything up. Don't just learn one strategy and think of trading that strategy every single day on the market. You can't do that. If you do that, you can become profitable because the market phase does not match with the strategy you are trading. So don't do that. Make sure that you learn different strategies for different modes. So if you learn training strategies, then you must always trade training strategies during trending mode. And if you learn ranging strategies, make sure that you find out if the market is ranging before you trade ranging mode. And I've not explained how to spot a ranging market right here, but in my previous videos, I've explained how to spot ranging market. The same currency trend meter. If you want to spot ranging market, you merge the stronger with the stronger. Both of them are all strong. At least when you open your chart, you get a perfectly ranging market. That's it. So make sure that your strategies matches with the phase in which the market is in with the help of the currency strength meter. So with this, let me go to the chart and explain to you what I'm talking about. Let me open raw chart so that you see what I'm talking about. Okay, so this is Euro AUD chart, and as you can see, look at the market. Looking at the market from this view, you can see that the market is either trending or ranging, right? But if you are to go a little deep, you realize that you can see that at this point of the market was trending. So if you apply your trending strategy like the trend line bounce, it will work, right? Because let's see that you try to put your trend line here, and if the market is moving, maybe power move, you trace, and other power move, and you want to cut the trend somewhere along the trend line, you'll be able to do so because the market is perfectly trending, and you'll be able to catch and make some profit. Let's say your order is here, your stop loss somewhere here, right? And you'll take profit target of maybe 1 to 2, and then you take your profit and you add to the market. Very simple. Because the market is trending, so your trend strategies work. But at a point where the market was not trending and you decide to apply your trend strategies, you may not have become profitable. You see, you may not have become profitable because the market is not trending. You saw that the market made a power move and it retraced, and you want to see that okay, the market broke this high, so you realize this high is broken. So as I explained, point A, point B, point C, and now you want to wait for the market to retrace back to any of this zone and then you buy. You waited and you bought it, and the market went against you because the market was already about to range and you didn't know. So it shows that don't trade trending strategies in ranging market mode. Spot the mode of the market before you trade. That's the first thing you have to do. At this phase of the market, you can see the market was trending, right? So if you apply trending strategy, definitely you're going to make profit. Okay, so with this, it shows that before you even start trading, determine which phase the market is in. That's when you use the currency strength meter to do that. So use the currency strength meter to determine which phase the market is in, just to sort out all the noises out for you. Because it's like a fish, right? If you're eating a fish, and you all know fish, will you eat every part of the fish? No. If you eat every part of the fish, then you get choked or you die. Why? Because you can't eat the fins of the fish. You can't eat the bones, right? You can't eat some part of it because it will choke you and you die. The same happens in the market. The market is like a fish. Keep this scenario in your mind, the analogy in your mind. The market is like a fish. You only eat the good part of the market and leave the rest, you throw it away. Okay, or give it to the cat to eat because cats are very good at fish. So if you're a human being, if you're a person and you want to eat every part of the fish, you get choked. The same happens to the market. You don't trade every part of the market. You trade only the part of the market which is profitable, which is succulent, okay, which you can eat well. So you eat only the part of the fish you can eat well, the fresh fish, the fresh meat, and leave the bones. And to be able to have the ability to do that is a skill because if you give the same fish to a small boy, the boy might get choked because the boy will decide to eat everything. But if you give the same fish to an adult or a grown-up, the grown-up will be able to sort out the fresh meat from the bones and know which one can choke or he can get choked, and then he will just take it out. The same happens to the market. If you're an amateur and you think you trade in the market every single day, you're going to have a lot of losing trades and you're going to die. You're not going to die physically, but your account is going to die. Just like in fish. The fish is going to choke you for you to die. So use this analogy in your head. The market is like a fish. You must have a skill to pinpoint which part you should only eat and leave the rest for you to go. Okay. So with this, I think that's all for this video. I've explained so many things to you. I'm Setowas, your mentor here. Come back every time to watch such videos here and gain more knowledge and use it in your trading. Until then, take care of yourself and see you next time.